Welcome back to another video. Soel here, and today I want to teach you a very easy scalping strategy that is run on 1 minute time frame. To execute this strategy successfully and profitably, you need to consider some important points which I'll explain them throughout this video. Just make sure you watch this video until the end so you won't miss any important point. Without wasting any more time, let's get started. Alright, as I said, this is a 1 minute scalping strategy. So here we set the chart time frame on 1 minute. This is the price chart of euro to dollar, but you can use this strategy on any other asset, whether it's Forex, crypto, or stocks. The only requirement for this strategy in terms of the asset or market is the trading volume and liquidity. This is a 1 minute scalping strategy, and we're going to actively trade in a day, and the profits that we're going to take are very small, so we don't want to experience unreal price gaps or large spread between buying and selling prices that are caused by insufficient order book, because this can damage our trade entry, stop loss, and profit. In this strategy, we have 3 indicators. For adding indicators, here we click on indicators and we simply search the name. The first one is MACD, this one, and for MACD we must adjust its settings. For the fast length we set it on 5, for the slow length we set it on 8, and the rest are fine. In this strategy we only need MACD histogram, so here in the style tab we keep histogram and on select the other ones. The next indicator that we should add is parabolic star, this one, and we use this indicator with default settings. And the last indicator is moving average, a simple moving average, this one, and we must change its settings. Here in the inputs tab, for the length we set it on 100, and for the smoothing length we set it on 10. And here in the style tab we select smoothing line, so it's added alongside with moving average line. Everything is already set on the chart, and before we start the strategy, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, now let's see how we trade based on this scalping strategy. In this strategy, speed and taking action instantly while you're checking all the conditions is very important, so please complete focus on what I'm saying and watch this video until the end, because I'll mention important points regarding this strategy that you must consider in practice when using this strategy. This is a trend following strategy, so we identify a trend and we enter in the direction of that trend. For this purpose, we use this moving average line. When the price is above this moving average line, the market is considered to be bullish, so we look for opportunities of opening a long position. And when the price is below this moving average line, the market is considered to be bearish, and we look for opportunities of opening a short position. Here in this part of the chart, you can see that price is above this moving average line, so the trend is up, and we must discover opportunities for entering a long position. Parabolic star, if you're familiar with this indicator, it changes its position above and below the price in turning points of the market. When the price is advancing, these small dots or points go below the price, and when the price is declining, they go above the price. In this case, when they are above the price, they show pullback, and when they go below the price, they show end of the pullback and turning point of the market. So while the price is above the moving average line, and when the first point appears below the price, and at the same time the MACD histogram is also green, it gives us the signal to enter a long position. So we can buy here at this point at the beginning of this candle. Please pay attention that in parabolic SAR, the points appear when a new candle opens. So here when this point appears, you must quickly check all the conditions and instantly enter a trade. Otherwise, you may lose some parts of the move. The stop loss for this trade is placed below this swing low, and in cases that you think it's far from your trade entry, you can set it at a higher level and set a tighter stop loss. And for the profit target, the profit of this trade is taken when in parabolic SAR, the points change position, actually goes above the price, which shows a possible turning point of the market. So we take our profit here at this level as this new candle opens. Again, here we have another opportunity for opening a long position. After this pullback, we got a point below the price while the price is above the moving average line, and the MACD is also green, so we can enter a long position here at this point. The stop loss for this trade is placed below the swing low, and the profit target is when we get a point above the price, which happened here. So we take the profit of this trade here at this level. Moving on the chart, after this pullback, we got another opportunity for opening a long position. We got a point below the price while the price is above the moving average line and the MACD histogram is green. So we can buy here at this point. The stop loss for this trade is similarly placed below the swing low, and the profit of this trade is taken when we get first point above the price, which actually happened here. So the profit of this trade is taken at the beginning of this candle. Here, shortly after, we got a point below the price, but not a well-developed pullback, and also at this point the MACD is red, so we don't take any action here. Moving on the chart, we got another pullback, and the point went below the price, and the MACD histogram is green. So we could buy here at this point. The stop loss for this trade is similarly placed the swing low, and the profit target for this trade is actually when we get our first point above the price, which actually happened here. So this could be our profit target. This trade didn't end up with loss, and we closed our position actually somewhere near where it was opened. But there is an important point here that we could decide not to enter this trade. For our moving average line, we also added smoothing line, the orange line. When these two lines are converging and getting closer to each other, like this part as you can see, which are not parallel or diverging like these parts, this can show that the market is probably changing its direction. So it's better not to take any trade in this situation. And when they are totally close to each other, or they are placed on each other like this part of the chart as you can see, you shouldn't take any trade in this situation because it shows flat market and probable change of the market from one side of the moving average to the other side. As you can see, it happened here. And always remember that when the price goes to the other side of the moving average line, don't hurry and let the market develop in that way. Always pay attention to these two lines. Start taking trades when there is a distance between them and these lines start diverging from each other, or at least in a parallel situation. For taking short positions, we do the opposite. The price must be below the moving average line, and when we get a point from parabolic SAR above the price, and if the MACD histogram is also red, it gives us the signal for opening a short position. So we enter a short position here as this candle opens. The stop loss for this trade is placed above the swing high, but as I said, if you think it's a little bit far from your trade entry, you can set it lower, for example above the high of these two candles, and the profit of this trade is taken when we get the first point below the price, which happened here. So the profit of this trade is taken at this level. Moving on the chart, another opportunity after this pullback, we got a point above the price while the price is below the moving average line, and the MACD histogram is also red, so we can enter a short position here at this point. The stop loss for this trade is similarly placed above the swing high, and the profit of this trade is taken when we get first point below the price, which actually happened here. So the profit is taken as this candle opens. Moving on the chart, after this pullback, we got another short position opportunity, but it's better not to take this trade because the lines are converging and this trade will have higher risk of not achieving the expected result. Alright, now the most important aspect of this strategy for running it successfully and profitably, risk management. This is a scalping strategy and you're gonna trade actively in a day, so if you don't manage your risk properly, you may blow up your trading account faster than what you think, because losing trades are part of the game and it's impossible to win every single trade. So you must exactly determine how much you will lose if the market goes against your position. There is a risk management strategy for active trading which is called 1% rule. I have a complete guide to this strategy. The link is also in the description of this video and I highly recommend you to watch it, because without this you cannot successfully run the strategy I explained in this video. Not only this strategy, but for any other trading strategies, it's really important to manage your risk properly. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.